So we've got
Good.
our key
Great.
speakers here. Awesome.
Yes, we have our guest speakers here as well. So great. We'll get started. So again, thank you so much for joining us today. This is a Residential Resilience Action Team meeting. And we are going to have a great presentation today on our agenda. We have a lot of things going. So I will start off with some introductions as to how we became this task force and give you a little bit of background for those of you that are joining us for the first time. And hopefully we have some public members as well. And then we will talk about our public listening sessions and feedback. We had a great time this past month with the public and hearing their feedback and concerns. So we'll talk a little bit about that. We will also have a presentation on flood insurance programs that occurred in New York and other cities. We'll have two guest speakers to speak to that. And then we have our flood insurance options for DC as we continue to narrow down with what this action team is working on. So we'll get into that conversation and then we'll close out with our next steps and I'll let you have the rest of your afternoon. So with that, so our summary of the task force, we were established in response to the September 10th, 2001 flood. So quickly after that, on September 23rd, the city administrator convened a flood task force. This task force reports to the Deputy Mayor of Operations and Infrastructure. My favorite acronym for the city's government is DMOI. And Lucinda Babers and her team are doing a great job with this. DC Water and DOE are the co-chairs, both Mr. Gaddis, the CEO of DC Water, and the director, Tommy Wells, are the co-chairs. They're doing a wonderful job by lending us their some of their top talent in the agencies. So we kicked off this meeting of this task force in November of 21, and all the proceedings of these meetings are open to the public. This particular meeting is being recorded so that we can capture all of the discussion in our minutes, and those minutes will be posted on the website, which is dcfloodtaskforce.org, all one word, dcfloodtaskforce.org. And then we will continue to have public listening sessions in future months. Thank you so much. Next slide, please. So we have a regular schedule so that we can get through all of the details of this discussion. And so the full flood task force meets every other month on the third Wednesday. And our next meeting will be Wednesday, May 18th. Action teams are like our subcommittees and they meet every month. This is the residential resilience. We're meeting today on the second Tuesday of the month, and our governance and coordination typically meets on the second Friday of every month. However, this second Friday of the month happens to be a holiday in the District of Columbia. It is Emancipation Day, so we have rescheduled it for the following week. Our flood task force final report is due in November of this year. Every category of all the 9 categories must have an action plan, and so we're working towards that now. We'll talk about that a little bit more later in our meeting today. We do have a final report that will be done, as I just said, and after that final report is done, this task force will meet annually, and what we'll do is track the progress of the action plan that's been established, and we'll continue to discuss the budget priorities for the action plan. Next slide, please. So just as we were speaking, there are 9 categories for the action teams. We've split them up in 2 different focuses. The first one is the residential resilience, which is this particular action team's meetings focus, and that will cover categories 1 through 4. And then the governance and coordination will cover categories 5 through 9. The next meeting for governance and coordination is on Friday, April 22nd at 9:30 a.m. Next slide, please. So our public listening sessions, let's talk about the feedback and discussion that we had last month. Please, next slide. So we did have virtual meetings on March 28th and March 31st. We tried to make sure that we had the time slots available so that the public could actually participate. So we had one during the lunch hour and one in the afternoon, late afternoon, evening time. We did have great conversations. We did have 22 participants at the first one and 21 at the second. So we were really pleased with that participation. Of course, you'd always want more, but that was a really good amount of folks chiming in and sharing their thoughts. Next slide, please. So when we were having our public listening sessions, the whole point and purpose is to have public feedback and input. So we got a lot of questions, there were comments, and there were quite a few concerns. We captured all that information and we heard quite a few things. This is just a summary of what we heard. In particular, we heard stories like one resident had paid $15,000 upfront for flood damage in their basement, and they only received $3,000 in damage relief. And those are the kind of things that that really raise eyebrows, really make us all think, what can we do to make that that issue a non-issue, and how can we plan for that? How can we make programs and priorities to alleviate those kinds of upfront expenses? So we will be talking about that in our action teams. And let's go to the next slide, and I can kind of show how we're doing that. Great. So with our public listening sessions, we've created a spreadsheet so that the action teams can actually get into the response of these comments and questions and concerns. And also, if there's a treatment for it in the action teams for the flood task force to address, we will actually make sure that they fit into one of the 9 categories. And maybe we might have to add another category if it's a common issue. But this is the document that we're working off of, and this is just a summary of, or a snapshot of probably 50 entries that we have that we are moving through. What I want to bring to your attention here is that we've captured the conversation or the comment that the resident has brought up. We associate it with the agencies that are responsible, so it's kind of a worksheet for us. And then we talk about, then we make sure that we have the response to the resident is captured. And then we will also, if needed, associate a category for this work to be, incorporated to what the action plan will look like. Next slide, please. With that, I will turn it over to Nick Barnard from DOEE. He will introduce our special guest for the next part of our conversation today. Thank you, Nick.
Thanks, Monty. And hey, everybody. So really, we want to spend the rest of the session just talking about flood insurance. The last couple action team meetings, well, the last action team meeting we had and the last full task force meeting, I know we greenlighted a bunch of various actions that the task force can get to work on, start drafting action plans on. That's great. We're making progress on those. But one thing that has been very clear over the past couple months is that we still have lots of questions about flood insurance, about what we would want a new flood insurance product to do. And so what we're going to do today is we're going to have 2 experts, Dr. Carolyn Kuski and Len Schaubman, come to talk to us about their experiences helping other cities researching the flood insurance affordability problem, and kind of hopefully frame for us some questions that we can consider, but also some potential, I guess solutions might be a strong word, but potential ways that we could tackle the problem. And then I think hopefully we have, we'll hear from Dr. Kuski and Len about that, but also have some discussion amongst the task force members. And then I think we can set aside the next action team meeting to really focus on making some decisions about where we want to go in terms of insurance. So that's really what we want to focus the rest of the day on. And so with that, I'm gonna turn it over to Carolyn to get us started, and then I think at some point we'll kind of break for discussion and then bring Len on to talk a little bit more and give us some more food for thought. So Carolyn, why don't you take it away?
Yeah, thanks. I have some slides, but it says I can't share until a host makes me a presenter. Is there a way to do that?
I think we can, Adria.
Oh, yes, it seems like that is working. Let me see if this works. I don't
So we can see.
usually use WebEx. Can you see the slides like big?
Yeah, presenter. Yeah, we can see it.
Okay, great. You don't see all the other stuff or whatever.
No, just the slides.
Okay, good. Then you can focus on that. Okay. Sorry. Thanks, Nick. Good to see some of you again who I've talked to, and nice to see some new people as well. I'm Carolyn Kuski. I'm the executive director of the Wharton Risk Center. We're a research center affiliated with the business school at Penn. But before I was up at Penn, I was in DC for almost a decade. So it's fun to be thinking about DC again. So what I'm going to do is just provide some background on some work my center's been doing, thinking about this broad problem that DC is grappling with and how some other places have been thinking about how to solve it using insurance-based tools, in particular, a pilot that we're helping New York City get started with right now, in the hopes that maybe there's some lessons to be learned across these locations. So with that, I wanted to start by just giving a little bit of motivation to how sort of as researchers, we've been thinking about this problem and the policy context. So to kind of jump right in, and I know some of you have been thinking about this very deeply, but I just wanted to make sure we're kind of all on the same page about where we're coming from and what motivated the work in New York City that I'm going to tell you about. So at a general level, there's now a pretty large body of research that finds that individuals and households with and small businesses with insurance recover better and faster than those without insurance. And the way that's measured varies, but there are things like people are more likely to rebuild if they have insurance. They rebuild sooner. They have higher self-reports of recovery and saying that they're recovered earlier than people who don't have insurance. And of course, that's because having the resources to repair and rebuild that insurance provides you with lets you do that, right? Get a safer home, restore lost items, and this type of thing. And in addition, insurance is foundational in some ways, in my mind, to other aspects of recovery, because once you have those financial resources in order to cover the thousands, tens of thousands, in a very severe disaster, hundreds of thousands of dollars of damage that a household could sustain, then it's linked to all these other outcomes in the research. It's linked to emotional well-being and mental health, to things like educational attainment, the stability of families, and protection against really long-term negative financial consequences for households. And that's because if you don't have the funds to meet all those costs that a disaster imposes, it requires all sorts of coping activities that can be really harmful to households and limit their ability to build wealth, like taking on a lot of debt, falling behind on bills, foregoing important expenditures, and draining whatever savings you have, and maybe savings for other important things like retirement or kids' education and so forth. So that's why insurance really plays this kind of important role in recovery. That said, we know that there's a lot of inequities in recovery too. So there's also a large body of research that's clearly demonstrates across locations, different types of studies, that lower income groups and communities of color typically suffer disproportionately from disasters and tend to recover less quickly than more privileged residents. Some of this is driven by inequity in who is exposed to the hazards, who is living in areas at risk. Some of this is driven by inequities in the safety of homes, in access to preparedness resources, and access to information. But a lot of it has to do with inequities in the funding for recovery. And so that's what I want to focus on here, because that's really right where insurance comes in to play a role. And so you can really think of disasters as these negative financial shocks for households. There are times when expenditures go way up. And we also know for some households, it's also a time where income declines as well, because there could be interruptions to business for when a severe event happens as well. And when it comes to dealing with this kind of financial shock, there's essentially 4 sources of funds that households can turn to. They could turn to their savings. They could turn to credit, aid, or insurance. And we know that lower income families often struggle with access to any of these 4 sources. So we know that, over half of Americans don't even have $400 in liquid funds for an emergency. So they certainly don't have the thousands of dollars that are needed to deal with disaster damages, right? We've been looking, so the first line of defense in the US for those who go through a disaster is actually a disaster loan from the Small Business Administration. They also run the household loan program, and we've been looking at that data up at our center, and you see this like really stark thing that as income goes down, loan denials go way up. And that of course makes a lot of intuitive sense, because you're not meeting debt to income scores and credit scores, that's income ratios, these kind of criteria that are used to determine loans. So we know that low-income households tend to be locked out of access to credit. We also know that might not be a good source for them anyway, right? Because some of these families might not be able to take on more debt and be able to pay that debt. We know that federal aid is, this could be a whole conversation we have just on sort of the federal disaster programs, but let's just leave it for now to say that they're insufficient and too delayed to really meet needs. So that's why insurance is so important, and yet these families also can't afford insurance. So while it would be great if we could magically give everyone more savings and reform a lot of federal disaster programs, without those things happening, we've been looking at how we could make headway on the insurance piece to kind of open up insurance to a wider range of households. And so this is part of this sort of global concept that's been emerging in recent years that's referred to inclusive insurance. And it just means any sort of policy or program that's designed to meet the needs of those that are currently unserved or underserved in the insurance market with appropriate and affordable coverages. So we've been thinking about what inclusive insurance means for flood insurance in the US and for disaster insurance more broadly. So as I turn now to telling you about a couple other examples, I want to just mention two things to kind of get us all on the same page. The first is that insurance can be purchased at all scales. And we typically think about a household or an individual purchasing insurance, right? Purchasing your homeowner's insurance or your auto insurance or your health insurance. That's sort of like the standard level. But what I'm going to tell you about now are two examples. One is what's called Meso insurance, where you have an entity above the household or individual, like an NGO or a city government, that's securing insurance on behalf of residents. There's also micro insurance, which is actually the vast majority of inclusive insurance programs around the world. And these are policies that are sort of smaller in coverage and then have very small premiums to meet the needs of lower income individuals. And so we'll also talk a little bit about what microinsurance means in a US context, because it's really something that's been used in developing and emerging economies around the world. And then also some countries purchase insurance, but we're not talking about that today, but just to be comprehensive about kind of these kind of variety of scales. Okay, so I'm going to tell you about this New York City Meso insurance project. I'm also going to mention microinsurance in the US. Both of these are going to make use of what's called parametric insurance. And I think most folks on the call know what this is, but I just want to make sure everyone's clear because it's important to understanding how these pilots are working. So most of the insurance that most consumers in the US are familiar with is actually called indemnity insurance. And it means that you're paid the damages that you sustain, right? So if a tree falls on your roof, then a loss adjuster from the insurance company, an actual person, comes to your house and assesses the damage, and you're paid the amount needed to repair that damage, right? Subject to the terms of your policy and whatnot. Parametric insurance is actually really quite different. And the idea here is that there is a predetermined set payout that's paid based on an observable metric of the hazard event itself. So these are things like when there are wind speeds that exceed some threshold within so many miles of your home, you automatically get a certain amount of money. Or there's an earthquake parametric product in California, for example, and it's like when ground shaking near your home exceeds a set level, you automatically get $10,000. Now, you can see that parametric insurance cannot replace an indemnity insurance, and it's not designed to, right? As a homeowner, you really need your indemnity-based homeowner's insurance, right? Because there's a risk when it's based on some measure of the hazard that you could be paid far less than your actual damages. And so, you know, your lender, for example, is not going to be happy with a parametric homeowner's insurance product. But there are two things that the parametric insurance can do that can really help us with this particular problem of inclusive insurance. And that's that the payouts can be made much faster, because you would basically eliminate all the adjustment process, which is time consuming and is often contentious. And so there's often, often people will contest the amount of their policy. They'll have to bring in other independent adjusters. You know, in the extreme case, there's lawyers involved. In any case, in a big disaster event, there's often insufficient numbers of adjusters and can take a very long time for them to get to everyone that needs adjusting. So typically, an insurance payout would be made in weeks or months after the disaster event. We've seen it go as long as a year in Puerto Rico after Maria, but parametric insurance can be paid literally in days. The other thing is that it has much lower transaction costs, which is going to be important for the microinsurance piece of this, because you don't need to pay a person to show up and adjust the loss. You can just look at some independent measure. And so that reduction in transaction costs is what's going to allow a profitable model for microinsurance. Okay, so that was just getting us on the same page. I now want to tell you about the New York City project, but I want to pause. If anyone wants me to explain anything else or ask any questions, please feel free to interrupt and just take yourself off mute since I can't see you. Otherwise, I will go on to talking about
Carol,
Yeah.
this is excellent. Is there verification for parametric insurance, or is there no verification at all?
Yeah, so this is kind of a sticking point when it comes to parametric insurance, because typically insurance law requires a couple things. One is that this is going to become an issue in the New York City thing. It requires insurable interest. Like, there's laws that you can't take out insurance on like your neighbor's house, right? That would create all sorts of weird perverse incentives. But what you're kind of referring to here is sort of proof of loss requirements, because insurance law typically is indemnity based, right? It's an indemnification product. It is not speculative, which would be a financial derivative, right? When we're talking about households, though, it's important. And so there's lots of parametric financial derivatives, things like catastrophe bonds and stuff that are made use of by big firms and larger scale governments. When we're talking about households, it's actually really important that it be classified as insurance, because then it's not taxed for the homeowner. And also, depending on how that insurance company is treated by the state, they might also get some backing from things like, we don't need to get into that. But so you do have to show a typical proof of loss so that you don't get paid if nothing bad happens to you. For the microinsurance and parametric products that are on the market right now in the US, these have been things like the earthquake parametric product I mentioned in California. They send you a text message that says, did you sustain any financial damage from the earthquake that we just noticed happened near your house? And you have to text back yes to get your payment. If you say no, you don't get your payment. So they're pretty simple like that. Some are looking at whether you can make use of drones or satellite data or other things like this, because if you start to make that proof of loss complicated, you've undone all the benefits of a fast payout, right? But this is a very live issue for regulators. Did that answer your question?
Yeah, just because on a relatively similar note, where we were providing backwater valves for people that got flooded out, we insisted on at least getting a picture of the flooding, preferably with a date stamp.
Yeah.
So I'm just curious.
Yeah, I think things like that would work really well. And especially, harnessing a lot of the mobile platforms, like you could just text a photo.
Right.
To kind of meet this need. Yeah, I'll get to, after talking about New York City, I was going to mention what Puerto Rico has done in this space, because they're the only jurisdiction that really has started a microinsurance market in the US. And they've actually, we can talk about this then, but I'll just go ahead and say it now since we're talking about it. They've actually waived all proof of loss requirements for microinsurance only, because they've said that, and so they have, well, okay, I'm telling you now instead of in a few slides. Puerto Rico has set up regulations defining what microinsurance is, and it has to have a premium that doesn't exceed a certain percentage of median income for the area. It can't have a payout that's larger than so much money. So it's really sort of fast, flexible dollars right after a disaster. And the insurance regulator made the decision that if a major hurricane or earthquake had hit Puerto Rico that would trigger this microinsurance policy, there was no way that a household didn't sustain financial damages at the level of the payout, which was like $5,000 or $10,000. And so they just said, we're just going to waive it for this.
Thank you.
Yeah.
But it might also be worth pointing out that with parametric insurance, my understanding is that, yes, sometimes you'll pay somebody who doesn't actually have damage, but the cost of doing that is still much lower than having to, essentially hire people to go out and survey and confirm whether damage was done. Is that right?
I think that's right, but I might also say that in the context I think that's right in general for parametric. When you're talking about these microinsurance policies that are really targeted at sort of small amounts of money for lower income households, most of the cases we've looked at, the damages are going to far exceed this payout. And that's also, if you think, one of the nice things about parametric. And so one use that we're not talking about here today, but one use case of parametric that's been there's some companies that are trying to get this, I mean, they're already marketing this in places like Florida, is that your standard homeowner's policy is going to cover the damage to the structure of your house, but there's actually lots of other costs of a disaster, right? Like debris cleanup in your yard or landscaping things, or you might be out of work for a while, or you might have really long commuting costs because the infrastructure is down, or all the food has spoiled in your refrigerator, or you need additional living expenses while your home's being repaired. You know, it just goes on and on. Like costs of a disaster are actually much more wide ranging than I think is typically appreciated. And those aren't covered by your standard insurance policy usually. So it's also sometimes used to cover these other types of expenses. But if you can't afford a regular insurance policy and this is all you get, then definitely your costs are much larger than actually even this payout. Does that make sense? So it's kind of like what the role is of it.
Yeah, thanks.
Okay. So I'll now tell you a little bit about what's going on in New York City in case maybe this spurs some ideas for thinking about what DC could do. So this is a project that was funded by the National Science Foundation through a new program they have called Civic Innovations, which pairs cities with researchers. It's a partnership by all those groups that you see on the slide. And the project actually has 4 components. It has the insurance pilot that we're doing, it has some research studies we're doing, and then it has some capacity building for the local NGOs and the city that we're working with, and then also helping build up a community of practice around harnessing risk transfer for these types of goals in New York City. I'm only going to talk to you today about the particular pilot, but just to be clear about kind of all the pieces that are fitting together. So this was done in 2 phases, and the team decided that the problem that the city is trying to solve is that they want to increase the financial resilience of low and moderate income households in New York City to escalating flood risk. And they made the decision early on to focus specifically on rainfall related flooding. And that was because after Hurricane Sandy, the city had done a lot actually to start addressing coastal surge risk, which is the predominant type of flooding they experienced during Sandy in terms of gray infrastructure, green infrastructure. Also, all those areas are mandatory flood insurance purchase zones for the National Flood Insurance Program. And there's pretty decent take up in all those regions of New York City for flood insurance through the federal NFIP. They, in August and September, experienced some really severe rainfall related flooding. One was when the remnants of Ida came through. You might have read about it. That caused a lot of property damage and also loss of life that made the city sort of even more concerned about this type of rainfall flooding. All the climate models predict that these intense rainfall events are going to get worse for this region, for actually DC too, and Philly where I am, the whole kind of mid-Atlantic. And these are areas where people aren't told they're at risk of flooding. They don't have flood insurance. And the city recently modeled this type of stormwater flooding. So that was decided to be the focus. So what we did in stage 1 was we brainstormed a whole bunch of different policy options that could meet this problem statement. And I know this is a lot of the work that DC has been doing recently as well, right? So we looked at things like microinsurance. We looked at direct community assistance. We looked at whether you could invest in hazard mitigation in a way that would lower insurance premiums. We looked at whether you could have individual household consultations to help build financial resilience. We looked at directly subsidizing NFIP policies for people. We looked at community-based models, and then this Meso insurance model, which is what was ultimately decided on. And so to evaluate all those, we did this sort of intense period of stakeholder engagement where we did a bunch of interviews and focus groups with all sorts of different city agencies and NGOs and others working in this space in New York City to kind of identify how these different types of policies would score on different criteria that you might care about. And what we found was that a lot of things were just quickly not possible in New York City. And I should say actually that this grant had a 12-month time frame. So for example, we heard that the city of New York was not going to be able to purchase insurance anytime soon. They had some opposition to it from the comptroller. They'd have to work through a whole bunch of things internally. Their procurement process wouldn't really allow it. And so maybe 5 years from now, they could gear up to have the city be engaging in insurance, but that wasn't going to happen in a year. So that was just off the table. Some of these we had thought about funding through an assessment on properties, like in addition to the property tax. That was a political non-starter, not going to go anywhere, especially soon. So these kind of immediate, not feasible in the near term, really whittled down for us what type of intervention we could try to pilot really quickly. And so what was decided on was this, what's referred to in the literature as this Meso insurance model I mentioned. So essentially what's happening is our partner on the project is the Center for New York City Neighborhoods. They, part of them is a CDFI. They're also just a big housing NGO that's been working with lower income residents in New York City for a very long time, helping them with housing needs. After Sandy, of course, the intersection of disaster and housing became critical how important that was. So they've been doing a lot on disaster resilience for residents as well. So what's happening is that they are purchasing a parametric insurance product from global reinsurers, and it's going to have it's parametric, so it's going to trigger based, and I'll get on this in a second, based on a type of rainfall related flood event. And when that flood event happens, the Center for New York City Neighborhoods will get a payout. They will take that money and then use it to make emergency cash grants to low income households. And they have a network of housing advisors in the city. And so what would happen is if there was a severe flood, the center would get this money within a few days of the flood. Those few days, their housing network would be out in the neighborhoods assessing needs, and then would be sending the people who had emergency needs to the Center for New York City Neighborhoods to enroll in this program to get the emergency grant. And the hope would be that they'd be able to turn around these grants inside of 2 weeks in the event of a big disaster. The idea for this is that these are grants to help financially stabilize households in the weeks after a disaster. They found after Sandy that even flood insurance and homeowners insurance can take months to get to people. Federal aid can take months to get to people, and low-income households don't have the buffer to deal with those months when their home is so damaged or unsafe that they can't even live in it, right? How do they pay for the additional living expenses? How do they do the emergency mold remediation to make the home safe to actually be in? And so this product is designed to meet those like really sort of emergency needs in those weeks. It is not designed to cover every last dollar of damage, right? It's to be this sort of like I said, a financial stabilization mechanism that can come in much more rapidly than all other sources of support. So that's the design of the program. They're going to be piloting it in a couple different neighborhoods. We looked at a whole bunch of different ways to prioritize and ended up just doing a kind of basic overlay of where is there a high amount of stormwater flood risk with low and moderate income households that are in that zone of risk. So you can see those are the kind of brown red areas here. So one of the pilots is East New York here, and we're probably going to do it in 3 other neighborhoods as well. And the types of things that we're now dealing with when you actually get into the nitty gritty of actually doing that is like, well, what's going to be the trigger? So it's one thing to say we want it to pay when there's a flood, but how are you going to measure the flood? And this is entirely new. There's not been a parametric product for rainfall related flooding on the market. And so all the other approaches to parametric flood don't really work. So the MTA, the Transportation Authority in New York City, has a parametric cap bond, and they use gauges for surge, for coastal surge flooding from a hurricane, but that's not correlated with the rainfall flooding, so that's not going to work. There's some river gauges, but again, this isn't a riverine product. This is a rainfall product. We looked at using measures of precipitation, but those actually also don't correlate all that well to actual damage in the house. So we've been looking now at a whole bunch of other innovative technology to be the trigger. Satellite data that can give you kind of footprints of the flood, on the ground sensors that can monitor in real time how deep the water is. They have a whole project going on between the city and some local universities to install these sensors around the city. Collecting flood footprints from social media, a whole bunch of like really interesting things to figure out how to get that trigger of when the payout would be. And then another tough issue, right, is that insurance is not free. You have to pay the premium. The idea of insurance is to be smoothing costs over time, right? So you pay a little bit in the good years so that you don't have to pay a huge amount in the bad years, right? And so insurance is really only cost effective for sort of severe flood events. It's not cost effective to transfer like an annual flood event, right? Like that. So finding that sweet spot of the severity of the flood that makes sense to finance through insurance as opposed to financing just through direct revenues is something that they're having to work through. And then a whole bunch of other things we can talk about if you want, but like how do NGOs in the cities work with these global risk transfer markets? How can you kind of figure out these solutions that meet the kind of target need of this population, but that also the market's comfortable with, and also that the regulators are comfortable with? How does this fit into all the other climate resilience policies and programming going on in the city? And I know, for example, DC, right, we've just started, you guys know you have so much going on around flood, so how would this fit in there? Okay, so that was the end of the New York City thing. I could either pause here, or I only have 2 slides on microinsurance. Should I just do that and then end? Then we can, Nick, does that make sense?
Yeah, go for it.
We already kind of talked about this, so I can just go really fast. We already talked about, so microinsurance, right, are these low premium, low coverage policies. They've been used for decades now all around the world, but just not really in the US. They've been used for things like health insurance, life insurance, crop insurance, livestock coverage. And so we've been doing some work on what it would mean to kind of bring that model to the US. And like I said, that Puerto Rico is the only place that's actually adopted regulation to enable this. So like I said, the payouts have to be within 10 days. They can't exceed 2% of an individual's annual income. So they've done this, and they've actually now, these were adopted 2 summers ago, and they've now actually effectively started a microinsurance market on the island. There's one firm that's been offering policies since the beginning, and 2 others that have offerings that are about to launch. They've been able to design it to be pretty affordable, but there are still segments of the population that really couldn't afford to spend anything on insurance, and they've been using philanthropic donations to just buy microinsurance policies for that population. But then Len and I worked on thinking about all the different models that have been used around the world and how you could design them here. So I told you about what New York City is doing. We, in Puerto Rico, they're harnessing some mobile technology, one of the providers there. You could couple microinsurance to other types of products and sales. That's been done effectively in many places around the world. And actually, one of the companies that is doing this in Puerto Rico, they had a car company that was having a big sale right at the start of hurricane season. And as a promotion, if you bought their car, they bought you a microinsurance policy for hurricane season. So that was interesting. And then you all, I know, have been having these conversations about the captive. And then you could also think about something like a public sector program doing this. Okay, so that's all. I'll stop there. Let me.
Carol,
Yeah, I'm happy to answer questions now or turn it over to Len.
you said there were firms offering these microinsurance policies in Puerto Rico?
Yes.
For these private firms?
Yes. Mm-hmm. Yeah, if you want to look up one of them, it's called Raincoat Insurance.
So they just entered the market. What did the government have to do to allow them to do it?
Well, several of these things had to be kind of, okay, so I think some of the most important things were, one, they created a different type of distributor, because reaching this segment of the population, they're often not using your typical insurance agent. And so they opened up, the Puerto Rico regulator opened up that other people can sell microinsurance. And so they have a different sort of microinsurance distributor role now. They also just put guardrails on, like, you know, premiums and coverages and all sorts of things. And Raincoat has said to us kind of informally that, like, that's really important, because when you have a brand new product and you take it to the regulator for the first time, it's really difficult to motivate private companies to innovate in insurance if they can't be assured that they're actually going to be allowed to bring the product to market. And it takes many, many months and a lot of time and money to develop an entirely new product, and firms weren't going to invest the time in microinsurance if they weren't confident that the regulator would approve it. And so having this regulation came out basically gave them assurance that Puerto Rico was supportive of this type of innovation. So we also heard that that was important. And then the other thing, which we already talked about, was waiving the proof of loss.
Question with regard to the New York pilot, difference between homeowners and renters participation?
So right now, the way the New York City pilot is designed is that the individuals are not getting an insurance contract and are not pre-enrolling in the program.
Mm-hmm.
And so the Center for New York City Neighborhoods will determine need after a disaster, and they're going to open it to both renters and homeowners.
Okay.
But the challenge with this, right, or sort of maybe the downside, so the upside is that they can then take the money and target it at whoever needs help the most.
Mm-hmm.
The downside is that people don't have a pre-disaster assurance that they have this, right? Because they don't have an individual policy. Whereas like in Puerto Rico, the individual actually has an insurance policy and is guaranteed that payment. And that's not the case in New York City. They're not giving individual pre-disaster assurances.
Has Puerto Rico's micro insurance been tested after an event?
No.
Okay. I hope they never have
That
to.
will be the interesting thing, won't it? Be to look at that. Yeah. There have also been some interesting things around parametric insurance and communication when you're developing like a microinsurance thing, because one of the concerns is that the triggers might not be things that are very intuitive to the buyer. And so like what this Raincoat company has been doing is that you can go on their website and they run how their product would pay based on past events over the last 50 years. You know, so you can be like, if Maria hit again, what would I have gotten? If this prior event hit, as a way to kind of make it more intuitive for people, because sometimes it's like you don't, you know, most households don't know what level of wind speed is going to be super damaging for them, right? So.
Hi, Carolyn. This is Sharon Ship. What was the amount of the grant from the National Science Foundation? That's my one question. And then the pilot program, it's targeted at how many households?
That latter question is something we can't answer yet, because we are still, we are right in the middle of this. We're like literally actively negotiating these things. So nothing's been decided yet, but there's a trade-off there, because there's only a limited amount of money for premium in the grant. And so you could have larger payouts for a smaller pilot region or smaller payouts for a larger pilot region, right? And that decision hasn't been made. That's a decision that the Center for New York City Neighborhoods is going to have to make, and they haven't made a final decision. The grant encompassed, like I said, a lot more than just this pilot. So across 5 different collaborating institutions, it was $1 million grant, but that was not just the pilot. That's multiple research projects and capacity building activities and conferences, and like I said, 5 institutions. So I don't think that is not what you need to do a pilot. You can do a pilot for way, way, way less than that. There's just all this other stuff going on in that project too.
Hi, this is Angela. I just have two quick questions. Have they done any research?
Angela, are you asking a question? Are you not coming through?
Yeah, can you hear me?
No, we can. Thank you.
Sorry about that. Yes. I just have a quick question, or maybe two. Do you know if they did any research on what would happen if the loss, the trigger on the paramedic product, if the person, it wasn't triggered for those certain people, the actual paramedic trigger wasn't triggered, but there was a tremendous amount of loss. Did they have any program that, or did they think about any program that would maybe cover those people who may have fallen through the cracks because they it wasn't triggered, or they didn't meet the trigger? And
Yeah,
I was just wondering. And then
question.
the other question that I had was, and what about the people whose damage might have been more than the valued amount that they had provided? Did they make any consideration for, or are they looking at any research on how to handle those idiosyncrasies, or had they done any research on that?
Yeah, no, those are excellent questions. On the first one, that's one of the reasons why New York City decided not to have individual level policies, because in Puerto Rico, I mean, and there's just, as we've talked about, right, there's benefits and costs to each model. And this is like another one of those trade-offs. If you have an individual level policy, there is a risk that you could suffer damage and it not trigger, right? The New York City one they didn't like that possibility. That didn't feel comfortable. And so the idea of having the center as the insurer gets around that, because they will get to decide who gets the money. So they'll be able to see afterwards where need is the greatest and make their grants to those people. So so that way, yeah, if there's someone with a lot of need, they can direct the money to them because they have that choice. Whereas if with the individual level policy, you don't have that flexibility. But as we talked about, there's other downsides to having it at the level of the center.
Thank you.
Yeah, the question on like covering all needs, this is like a really tricky thing, right? Because if you really want to be covered for all losses, I mean, all damage, you need a full indemnity policy. That's what you can buy through the National Flood Insurance Program. Any resident of DC or New York City can buy a product there. The problem is that disaster insurance is expensive, even when it's subsidized to some extent by the government. And lots of people just can't afford it or don't even realize they need it. And so they just go without insurance. And so this was really an approach that's better than nothing, right? It's better than them having nothing. It is not a replacement for having that full policy. And so that has to be understood. And so the way New York City conceptualized it was like, this is really about financial stabilization for the first few weeks. It is not about every dollar that they need. And I should say that another piece of that then is also they are really making sure that getting this payout from the Center for New York City Neighborhoods doesn't disqualify you for FEMA individual assistance awards, because there is duplication of benefits language. I'm sure some of you are down in the weeds on this, right? That if you have insurance, that's subtracted from any FEMA assistance award, but it's not subtracted if you use it for things that FEMA individual assistance doesn't cover. So they've actually put together this whole guidance for people on what they can spend it on to still get the individual assistance award, because especially for the families in a lot of financial need that they're targeting, they want them to be able to get every last dollar of resources that's available to them.
Carolyn, thank you so much. It's very apparent that why Wharton has you. They're so lucky to have you in New York City. Sharing your brain right now is, I'm sure, a great thing for them as well. We appreciate you sharing your thoughts and all the research that you've been doing, and the practical application of it. So I think it does edify the kind of conversations we've been having with the Flood Task Force. And we want to continue on. If you have questions for Carolyn, please drop them in the chat. We will also make sure that, if things are brought up in later meetings, we might reach back out to you for some more of your thinking and, experience. So with that, I want to bring Nick back up. Thank you so much. With that, I want to bring Nick back up and he can introduce our next speaker.
Yes, thanks. And so I think now it makes sense for Len to give you the stage. And just so everybody knows, Len works for Resources for the Future, but also frequently works together with Carolyn, and has worked with DOE in the past on just thinking through some of these various flood insurance programs and policies. So Len is going to give us another little bit different perspective to chew on, and we can ask some questions, and then I think the discussion can be both with Carolyn and Len after his presentation. So Len, do you want me to share for you, or do you want to?
Yeah, if you can make, just as you did for Carolyn, give me the sharing option.
Okay.
Let's see, there it is. I think I've got it. Okay, let me, I haven't used WebEx before to do this, so I guess I'll have to figure this out. What are you all seeing at this point?
So I see the PowerPoint. Yep, it looks good.
Okay, good. So I'm going to follow up. Carol has already covered some of the points that need to be made. I might just reinforce them. I'm going to take a broader view, but also focus on DC in particular. Excuse me in advance if I've said a couple of things that aren't quite right technically, but with regard to the DC flood situation. But that I don't think will detract from the larger point. So essentially, the current situation in DC is you really have a flood hazard. And I just want to make the point, and Carolyn's already made it, that flood is a very difficult to insure peril. And even if it's available, people don't usually purchase the insurance. So there is a coverage gap that you talked about. And basically what you have in DC right now is the National Flood Insurance Program is available. And if you have a sewer backup problem, you can probably get some kind of an endorsement on your private homeowners if you have that. The idea that people don't buy flood insurance is important, but it's also important to realize that people don't buy insurance in general. And I think that it's a very difficult product to sell. And the idea of people being reluctant to buy insurance is not unique to flood. That's why we have auto liability as a mandatory. Why banks require homeowners coverage and so forth. So let me talk briefly then about what you've got now, which is the NFIP. And what I'm going to talk about here is I want to just point out to you, some of you may not be aware that there is a paper that Carolyn and I wrote in a couple of, well, it's been a while ago now, about the NFIP in DC. It's available on the Wharton website. One of the things that we conclude in the paper after we go through how the NFIP would work in DC, and I must say, by the way, that paper is already dated in some ways because of risk rating 2.0 and the new rating system of FEMA, but a lot of it is still accurate. What the NFIP suffers from is exactly what Carolyn already covered. Claims payments take a long time. Sometimes, even when claims are paid, there are certain damages that aren't covered. The damages could be less than the NFIP deductible. Sometimes the NFIP it doesn't reward certain kind of risk mitigation strategies. An example would be nature-based features are not rewarded with premium savings. And because of the voluntary purchase, the NFIP has limited take-up. Now, why would you want widespread take-up in DC? It's about flood resiliency, and Carolyn's already gone over that quite well. So I'm going to skip that. I want to make a few comments about the DC flood peril as it stands right now, and then bring that around to what the insurance what the insurance opportunities are, and perhaps challenges in DC are. First thing I want to suggest is that we'll break it up. For me, I'll break it into three parts. You have overflow along the banks of the Potomac. Basically, I'll conclude that's a federal problem with a federal solution. It's not a residential area. The mall area is levied, it's being upgraded and so forth. The second thing you have is the stormwater, intense rainfall flooding problem, and that tends to be scattered around the city in a variety of places. This is not a map I put together. This is a map that came from DOEE. Sewer backup may be triggered in part by some of these kinds of intense rainfall events. I would characterize it as a high likelihood and a growing likelihood and more inconvenience consequences than devastating wipeout kind of flooding. There are some mitigation options underway. You all know about that in terms of the CSOs and so forth, but also more local. People have to people are very often self-insuring against this kind of flooding. FEMA aid is hard to secure. The NFIP, as I said, is not a good fit. And in certain areas of the city where the arrow is pointing, you ought to recognize that area. The NFIP is not really affordable. So we have this particular peril to be considered. And the next thing I'll say is, okay, then we have this coastal storm surge and upstream runoff. And that's where you get the overflow along the Anacostia, tributaries like Watts Branch. There are some mitigation options for that, but they're limited in that area because of the development patterns and so forth. And I would characterize this as a relatively low likelihood, but the consequences can be really disruptive, and our particular concern here about housing availability if we get a lot of flooding in that area from these larger storms. This is some statistics that were pulled together. We talked a long time ago with DOE. They pulled these statistics together. This is in the FEMA map floodplains, but you can see the data right there. The percent of DC residential structures in the 100-year floodplain in wards 7 and 8, 99% of the single family homes that are in the 100-year floodplain are in wards 7 and 8, 97% of multifamily homes that are in the floodplain as defined by FEMA are in wards 7 and 8. And it's a little bit, if you go out a little further to 500, the numbers drop a little bit more. The other thing I want to point out here is that this is the wrong slide. Wait a minute. Let me see here. There we go. The other thing I would point out is that one of the things that's going on in that area, the area I just described, the old Ward 7 and 8, I know they've been redefined. I don't know how generally as a category of geography. A lot of renter occupied, that basically single family homes don't necessarily dominate in that area. A lot of the housing is rental housing. It could be single family or multifamily small units, or it could be apartment buildings. And as you can see by some of the other data, these are census data pulled together by DOE, that you have a population that is not, that is let's say, just disadvantaged financially. And so the problem that Carolyn mentioned for recovery because of low income applies in this particular area. So, and anybody, I don't know if there's much to say about that. You all should be familiar with it. I'll pause here for a moment because I want to move very quickly to some building on what Carolyn said, do a couple of options on how you might address the problem as I've characterized it. I don't know if anyone wants to push back on my characterization, but I'll pause for just a moment. Okay, if not, basically, what I want to talk about here is a concept called layered coverage, and it's built around the NFIP for DC. Let me say that this is an exploratory idea, but DC's, and I want to just say one thing about New York. Carolyn said something really important, that trying to explore kind of more sophisticated or more complicated solutions to the New York flooding problem. They were constrained to come up with something, the Meso policy, which I'm going to comment on in DC for in a minute, but because they had a 12-month time frame to get a pilot on the ground. But I can say that there are communities in California that are thinking seriously about the kind of thing I'm about to talk here to you about here. But everything is very much in the conceptualization stage. I can't say, oh, they did this idea in XYZ place, okay? So this is an idea that you could build on or be a leader in, is perhaps what I should have said. So the idea is very straightforward, that there's some kind of coverage through DC government or a private insurer with capped claims payout up to some limit, say $10,000. I picked that reason, I picked that because it was out of the air, but there's also one reason I'll give you for in a moment. And then in layer 2, the NFIP covers everything above that. So if the damages exceed this cap, then the NFIP kicks in. But I want to unpack that more. Essentially, this is the micro parametric idea that Carolyn was talking about as a construct. And so basically, you could begin with the city, and I'm going to talk more about how this would work. But you could bring with the city focusing on bringing the micro parametric, referring more to the lower income folks in wards 7 and 8. But you could consider extending it citywide if you wanted to get this first layer coverage. It would always be capped. Now, what should the cap be? Is it $10,000? Is it $8,000? One of the things that you need to know is like, so what's the nature of this risk? What are the claims? What are the kinds of interior flooding? You know, what do you know about the actual claim, the exposure? And so you'd have to do a little bit of iteration and thinking about, well, how bad could it be? Would people be willing to pay for it? Are we even going to charge for it? Which brings me to my third point. And again, I'm not going to argue which way this would go, but you could ask, okay, is this going to be offered at no charge and paid for by city government, or is there going to be some structure around this where there's cost recovery by some sort of fees and added to the property tax or whatever, but then you could have means tested discounts. So for example, if you went citywide with something like this, you may want to have a full cost recovery fee, if you will, a premium for certain parts of the city, but perhaps not in the areas I highlighted earlier. You might have discounts. The basic idea, Carolyn alluded to this, the micro versus meso. And these have been, we've toyed around with these a little bit in writings with DOE, but only in a very conceptual way. So the one option is the micro or the parametric payout direct to property owners. And the property owners might be landlords of buildings, which I'll come back to in a moment. And DC would either be the buyer or the broker. You could expand the DC captive to offer this particular product. The property owner pays the insurer a fee, a tax increment, a premium, and there's some eligibility for discounted premium. It's a pretty standard kind of idea. What's important is it's a parametric product. The other option is to take basically what Carolyn described for New York City in the pilot, and that's the Meso policy, but basically that somebody either in government or in the NGO, there's a lump sum payout if the trigger is hit, and then somebody has to then decide, or some entity has to decide how the money will be distributed. The problem that comes up, and I keep hearing it, I've listened to some of your meetings and the task force, and this always comes up, is this thing going to be mandatory? Because we have this problem of people don't buy this coverage. If you start charging people for something, they're going to say, I don't want it, or they're not going to buy it. And I've highlighted the word mandatory, put a red line through it, because I would not imagine you would ever pull this off. I think the only way to get political support for widespread coverage probably in this system is to have it as default coverage. Basically say to the community, you're in, we're covering you. Here's the fee, you're going to get paid every year. But if somebody says, I don't want to pay, then they opt out. And then you have a DC commitment to flood awareness. Now, why would an opt-out be better than people making a voluntary opt-in? That just basically comes from the behavioral economics literature, and we have reasons to believe, although this hasn't been tested in the flood space, we have reasons to believe that many fewer people would opt out than people who would opt in. In other words, your coverage would be much greater if you had an opt-out than if you had an opt-in. And so that's kind of the argument for that. Or of course, that assumes you're charging a fee. So what about this coverage above the cap? This is a layered coverage. What would motivate voluntary purchase of NFIP above the cap? Well, the city has many options to make the premiums more attractive. The CRS, community rating system, mitigation actions that you could take with FEMA grants or otherwise. But an important point is layer one acting as a deductible. And don't hold me to the 40%, but that's a pretty high deductible in the NFIP world. And so you could actually, by implementing this kind of parametric micro policy, again, at a $10,000 level, you would see a substantial reduction in premiums. I've seen numbers as high as 40%. But what the premium would actually be at the reduction would actually depend on the particular properties and so forth. You also could you could means test and have a premium subsidy for those people that are owner occupied, and for landlords who rent to the certain categories of folks. You could have a premium subsidy for the NFIP for those folks. And then of course you could continue to actively do outreach. So those are that's kind of the big picture for how this would work. I'm going to stop here, and I have one more slide, but if you have any questions about sort of this is pretty fast forward through this layered coverage idea, but you would be in an experimental mode doing it, and it's not like it's going to be simple and to pull off, but there's a lot of work being done now, and you would be working along with others and trying to make this concept apply. So I'll pause for a moment, or I could do my last slide, Nick, and then we could just leave it open for everybody.
Yeah, maybe why don't you go through the last slide, and then we can just kind of.
Okay, I just wanted to say that probably what would you do next if you think this is a good idea? That what you'd have to do next is trying to do some kind of back of the envelope feel for, well, what's our claims exposure if we start thinking about insurance? What would an insurer's claims exposure look like? How would these caps look? What would that represent in terms of a pure premium or a pure fee? How much residual risk would we be transferring, or could we expect the NFIP to pick up? You begin to do that. The second thing you want to do is think about network design If you want to do parametric, how would that work? What would be the triggers, payout? And these again, proof of loss requirements that came up earlier. Sort of think a little bit more than just at this very vague level as to what you would do here. I want to say one thing on network design. New York City is doing some pretty interesting things, but I would point out that Charlotte-Mecklenburg, I think, has somewhere in the hundreds of flood sensors now distributed throughout that urban area. And they're not stream gauges, they're flood sensors along, along streets and creeks and so forth. So they did that, and it cost them, I can't remember, I think $70 or $75 a sensor or something like that, and to hook them up. So don't let that technology be intimidating. Once you do some of this back end work, I'll just say that you're sooner or later, if this is going to be an insurance product, you're going to have to bring in professional actuaries. You're going to have to bring in people who really do this kind of work and really nail down some of these numbers. So that's all I've got. I'm going to out of this. I don't know how to do that, however. So Nick, if you would help me stop sharing my screen. I'm staying offline from my video because I have bandwidth issues, but
that's great. And actually, Adria, can you pull up the discussion slide?
Actually, I have a couple of questions for Len.
Yeah. So actually, why don't you go for it, Sohail?
Hey, Len, a great presentation. Carolyn and you did a really fantastic job today. Thank you very much. Charlotte-Mecklenburg, they have flood sensors. Is that early warning or is it for insurance payment?
it is for neither. Well, it's for early warning. It's absolutely not for insurance. If I led you to that belief, that would be incorrect. It's for early warning and just for their general flood risk management programs. And they got those sensors put in as part of a grant from DHS. But it was a pilot, but now those sensors are commercially available.
Yeah, I would definitely call them. $75 a point is very cheap.
Yeah.
Inexpensive. I shouldn't say cheap. But I don't want to hog all your time. I'll wait for others to ask questions before I jump in.
Well, maybe just to kind of frame the rest of the day today, I think we've heard that the difficulty about the insurance discussion is there's so many facets and angles to it. And so I think Carolyn and Len today have kind of introduced all of us to a bunch of different ways to think about it. But I also want to bring in, at one of the previous meetings, Jed and Jane from ORM introduced a great proposal about how this might work, how insurance might work as part of a captive program. And I just want to, say that that's, that proposal and using the captive program is still very much in play. But I think that proposal kind of led us to questions like, okay, what is the amount of insurance we want to provide? How many people are we trying to provide it for? For what reason are we trying to provide insurance? And hopefully what you heard from Len and Carolyn today are a couple of different reasons of maybe why would you want to do a new insurance product, or in some cases, what are the different mechanisms that you would pay out. So I think this is a way of saying that I think it's all kind of in play, and hopefully this conversation today and some of our previous conversations are giving everybody a sense of the things to think about. And the questions that you see up here are where we would need to get in order to actually make a plan. So, there's, I don't want to spend too much time me talking because I think we've got the experts on the line, but I think just as a frame, one thing that DC has to consider, the Flood Task Force has to consider is, okay, so we have to set a maximum payout amount. Are we looking for a DC insurance program to be able to pay a full $250,000 to every person who has a policy? Or are we more looking at the micro and the 2,000 or the 500? Do we want to be specific on what payouts can be used for? Is it just for drywall repair? Is it going to be for a whole home replacement if it totally gets knocked down? Is that even a risk that we really have in DC? And then the question of subsidies. Are we going to ask people to pay for it? Full price, subsidized price, free? And how important is it to get quick payouts? And, you know, is that, if it's important to get quick payouts, we're more on the parametric side. Otherwise, we're more on the indemnity-based insurance. And the answer to all these questions are important because you can't just pick the most coverage for everyone, because that means you're going to have a giant bill either for DC government or for the person to pay a premium. So we need to kind of be strategic about how we're answering these questions and kind of limit it to what's the most important for the city. So I'm going to stop there, but I mean, let's just use the rest of the conversation to get Carolyn and Len's input and ask questions and figure out where we want to go from here. So I'll just kind of hand the mic back to Salil for now, and then if others have questions, feel free to jump in the chat or speak up.
I have a question. Is
Go
the
ahead.
reason for the focus on Ward 7 and 8 only because they are in the floodplain, or is it also because there's historical data that shows that they've suffered the most from flooding? And I'm asking that because the flood that gave rise to this task force did not impact Wards 7 and 8. And so that seems to be a little bit of a disconnect to me. If you ask what part of the city has historically been most impacted by flooding, is that Ward 7 and 8, or is that Northeast DC where the 2020 flood happened?
Do you, Nick, do you want, I threw up a screen, or maybe those data, anyway, go ahead. I don't know.
Yeah, just real quickly, you know, Ward 7, especially West Branch, was affected in the September 10th flooding. So, you know, they definitely are part of that. But the reason to focus on Ward 7 and 8, the reason that that at least at DOE we've been thinking a lot about them is because, number one, they're in the floodplain, right? And number two, they're generally much lower income than the rest of the DC population. Now, I know that's not true across the board, but those were two kind of primary reasons. I think it is totally reasonable and acceptable for this task force to say, yes, flooding in Ward 7 and 8 is a problem, but we also have a problem of flooding in Northeast DC outside the floodplain and other neighborhoods that we should make sure an insurance product works for them too. I think that's totally reasonable. And that's, I think, one of the questions that we need to answer amongst ourselves.
So could I jump in here, Nick? I think that there's Ward 7 and 8 is in the FEMA delineated floodplain, which does not necessarily consider interior flooding. That's where you have coastal storm and runoff. And 99%, I can put the data up there that DOE pulled together of the houses. But that's a particular type of flooding. If you look at interior or stormwater flooding, it's across the whole city. Well, there's a lot of areas. That's what those red circles were. So one of the questions that you'd have to ask is, do you want to insure against stormwater and interior flooding or not? If you decide you don't want to, then you're really only looking at that area, Ward 7 and 8. If you decide you want to offer insurance against stormwater flooding, then the geographic scope is going to get much larger. So one of the questions on this list might be, what type of flooding do you want to insure against?
The genesis of this task force was the interior flooding in Northeast DC. That's what the 2020 flood was, wasn't it?
Lorena, you are absolutely right. I would rephrase the answer a little differently. We definitely want to come up with solutions that work in the city, but we want to also check them, that the residents that are in the most need in Ward 7 and 8 also get a benefit of this, because they're disproportionately affected, like the data shows. But the solution isn't based on them. It's based on the entire city, but it should also be applied there. So I think we're going to look across the entire city to see how it works out. Coming back to these sets of questions, because at some point we do have to narrow this down. Right now we have a range of options out there. And some of these could be binary. Do we want to do something relatively small and quick to get immediate relief versus a replacement cost type insurance. And these are just, and in the next action team meeting, we'll go into a more robust discussion. Right now, we just want to put all the options out on the table and poll the attendees to see if there's any more out there. Jed, did you or ORM, anybody have any comments on what was presented? Or see a way that what you have presented in the past and what Carolyn and Len talked about could be melded together? Don't mean to put you on a spot.
So Leo,
Jed, you,
yeah, hi Salil, this is Jed. Yeah, it is a, I think what was presented was fantastic. I was really, it sums up a lot. I appreciate all the questions that Nick kind of summarized at the end. I think that really is what we need to be getting towards. I do feel pretty strongly that this needs to be a citywide effort. Clearly, we want to take care of affordable housing challenges and our low income residents, but that doesn't necessarily mean that it's only in Ward 7 and 8. We have, individuals all across the city, senior citizens. So we want to make sure that we're addressing a complete solution for all. The other element that Jane has raised on numerous occasions, and I think was kind of talked about a little bit, was around smoothing the edges. And I think we also want to try and make sure that there's a mechanism where residents around the entirety of the city are helping to offset the costs of insurance for everyone else. So as it's hopefully a non-frequency driven kind of loss is what we were talking about, meaning, you're not having a flood issue every year that you're paying for. The more people that also contribute to the program, hopefully then only the individuals who get impacted are going to get recoveries. So I think to Nick's point, we really just need to get to these questions and answer them. But we can continue to talk and talk and talk, but ultimately, are we doing a large scale program that pays large dollar amounts for total losses? Are we paying for things where people just need to get back on their feet and then ultimately have to sell their homes? Somebody's going to be moving to an affordable housing project that the city's put forward in the event that they have a total loss for their flood, and we're just covering them for getting access into that program and living expenses while they get into that program. Those are just questions that we need to get to. We need to have some answers on, and make sure then we just craft the program to match and meet those goals. So there's a lot of different goals. I think that Len, talking about a layered approach, clearly, in insurance, obviously layered approaches is always best, just getting people to go to the, starting, having a first layer of coverage for the more minor things and picking up, and where's the government the backstop? Where is NFIP the backstop? Where are other programs the backstops? And so really, ultimately, we got to get to the questions, and we can continue to say we want to cover everything, but everyone's going to have different perspectives and different beliefs about it's most important to get money into somebody's hand for $10,000 right now, right after an issue, and that's all that we're going to do. But then they're still never going to be able to have a safe and healthy home, so they won't be able to work, effectively. So was that what we're really trying to tackle, or are we trying to tackle fixing people's houses? The goal is to fix everything, but there's a cost to that. And so we need to just make sure that we're being good stewards and thinking about all these solutions, and really just answering the questions that I think Nick has put forward here. And from there, we can then say, okay, this is how we're going to craft the program. It's going to be about just getting people short-term coverage so they can be back on their feet as fast as possible. And that's all we're going to do. That's all that we can afford. Microloans are great. That's a wonderful solution, but it obviously isn't going to fix somebody's $150,000 loss if there's a major incident involving their home. So those are the types of things that we're going to have to make some conscious policy decisions about and policy recommendations So then ultimately the task force can say, okay, this is what we're going to do. Mayor, city administrator, DC Water, this is what we're going to get behind, and this is how we're going to support a program to make people better than where they are right now, which is with nothing, or are we trying to go for that bigger goal of everything? And from there, we craft our solutions that way.
That's a perfect entry into what we've been thinking about offline as kind of the staff supporting this. And I think that I know that we're going to talk about that a little bit more in our next meeting, right, Salil?
That's correct.
Yeah, we had a lot of those questions being discussed in our weekly meeting as we prepare for today's meeting. And so we will start to hone in on some of those. I think there's 3 circles that we tried to kind of zero in on. And I think that you'll be able to walk right into that conversation with thoughts from ORM. And I'm sure lots of the other agencies that are participating will be able to chime in better with that focus as well. So Nick, thank you so much. To our guest speakers, we really appreciate the time and the thoughtful presentations that you've provided. It's tracking with what we're trying to do here with this flood task force, and we're going to continue on as we wrap up this afternoon. Could we go to the next slide, please?
Actually,
Yes.
Monte, just to interrupt quickly, one question
Sure.
came through the chat from Andre Antizari. The question is, with interior flooding and accurate stormwater data, would it be possible to create micro flood insurance and differentiate costs block by block?
I think the answer to that is yes. There's also some models for this you could look to. There's a provider in the UK, for example, that is installing flood sensors on buildings and then having targeted payouts based on measures of inches of water at a particular house. And they're modeling the risk at a property level, not even a neighborhood level. So now, of course, there's huge uncertainty associated with some of these models, but yeah.
What I'm going to add to that
Excellent.
is you can't really predict where the storm's going to hit and the intensity. You could have a microburst to an area, and you could have a lot of flooding just in that localized area, and that could move anywhere in the city. So like Carolyn said, it's going to be measuring how much rain there was, particularly in one area, to be able to target it.
Stephanie, I think that another question came through the chat as well. Do you want to read that out?
Certainly. These 2 came from Barbara Mitchell. The first question is, did the private insurance participate in creating the program in Puerto Rico? And the second question is also, are there any lessons learned in Puerto Rico since they've stood up the program?
So in Puerto Rico, what was done was regulations by the insurance regulator, and the products being offered are all private sector products. So the insurance being provided is by a private firm. The Puerto Rican government is not providing or buying insurance for people. So they tried to create regulations to create a sustainable private market. Does that answer the question?
Carolyn, was it affordable? Do you know?
Well, yeah, it has to be less than 2% of your income. Do you want to call that affordable or not? But that's the cap that, yeah, it has to be. Could I just say one quick thing? Because I think it's important to remember that we have a federal flood program providing full $250,000 indemnity policy. And so I would think that it's important to think about what you're trying to solve for that doesn't solve for, because there's no reason to replace an existing program with the same thing, right? So just wanted to put that out.
Yeah, could I just say this is my last point, that what I was trying to argue was that the problem with the NFIP is people aren't buying it in DC, and that's true nationally. And so one of the things, if you want to get the kind of broad coverage you're talking about, what can you do to boost that coverage? And one of the things you can do is, I went through that, but it's not, if you want that broad coverage, take advantage of the NFIP, but to take advantage of it, people have to buy it. And so that's kind of where you're at.
Thank you, Lynn. Thank you, Carolyn. And we've actually talked about that NFIP program in previous meetings. So we'll continue to keep that on our priority list when we go through those categories and what we want to have a part of our action plan as a priority. So thank you. Salil, I want you to go ahead, and I know that we have about 4 minutes left. So unfortunately, you're gonna have to go through your 2 slides a little bit fast so that we can honor people's time and end on time.
Okay. So 4 minutes, I'm going to speak fast. So I think we have not all the information, but we've got adequate information right now. We're going to start drafting our action plans. So every agency, every person who's got one of these action plans assigned to them, if you need any assistance in formatting or looking at past meeting minutes or notes, please reach out. But we do need to start drafting these. Second piece is very important. We need to get your thoughts in on the flood insurance needs. At the next action team meeting, we want to try and narrow down the discussion. To date, we've looked at the entire range of what's available, and we've got some great ideas from Carolyn and Len. But like Jed pointed out, right now we have to narrow it down to what's doable, actionable. So that meeting's going to be dedicated to try and narrow down the discussion. We'll try and get you some points ahead of that meeting so that you have something to look at before we walk into the meeting. It's another slide. Great. We just covered that, options for moving forward. We can talk about both backwater valves and insurance. We talk about funding sources and funding options. It ties to both the insurance, the backwater valves, and any other initiative that needs funding. We need to talk about how do we go about quantifying it and documenting it. I'm going to just do a quick shout out to Warmisha. I know she's on the call. The $75 a point is very intriguing. I know she and her team have been looking at sensors. I know DC Water has been looking at sensors. We've not found anything under $3,500. So $75 a point is extremely attractive. So thank you for that tip. Back to you, Monty.
Great, and I did want to say the funding sources, if you go back one slide, Adria, sorry, that one point that Salil had, there will be some offline conversation to get with each of the agencies to talk about those funding sources so that we can prioritize that in our in the work that we're doing as well. We need to have some more drill down conversations and pinpointing, where, what kind of grant activities, what kind of funding sources that we can apply to some of our priorities that we've already set. So thank you. Next slide, and so we can wrap it up. All right, so we have some upcoming meetings. They're all virtual. The next governance coordination meeting, it will be on April 22nd. Again, this one is a reschedule because we have a holiday here in DC for Emancipation Day, which is Friday. So it's going to be the following week at 9:30 a.m. We'll have our residential resilience action team meeting next month in May 10th. And we'll also have our full task force meeting on May 18th. So we continue to roll along. It feels like we're having a meeting, I don't know, every other day, but but we are getting the work done, and we really appreciate everybody who's been participating. The offline conversations really do contribute to how we develop these agendas and the progress. I hope that the public, as well as you task force members, see it and feel it. And your time is very much appreciated. With that, I think that's it. So thank you, everyone, especially the presenters today. We want to thank DOE and DC Water for their at the table, effort in the background. And Alan Propp, want to say thank you to you as well. So with that, everyone, have a great afternoon, and we'll see you next week. Thank you. Bye-bye.
Thank you.